Hello investors, welcome to Simpli Stocks. Today I will talk about the biggest holding in my portfolio, which is Sky Gold and Diamonds. It has been in my portfolio for a very long time, but on the other side it has corrected and underperformed also over the last 1 year. But personally I see a lot of potential in this business. It is a very simple business model and is currently trading at quite an undervalued level or a good valuation. On top of it, its Q3, meaning December quarter results, were also very strong. That is why I have brought a separate detailed analysis of Sky Gold today for you. Today's video will be very special and interesting because through Sky Gold, we will also understand some other very important investing concepts like what PE re-rating is, how can you value a business using an exit PE, and how you can calculate your personal return expectations. But yes, as a very strict standard disclaimer, this video is not a buy or sell recommendation on Sky Gold in any way. Sky Gold is just a case study for us today. Our intention here is to help you understand basic investing concepts so that you can use these methods to analyze any business on your own. And yes, if you are excited about this video, write gold in the comments. With that, let's get started. So Sky Gold and Diamonds is a B2B jewelry manufacturer. This means it designs and manufactures jewelry for other jewelry selling companies. As you can see, almost all well-known brands, jewelry brands in the market are its customers, such as Kalyan, Malabar, Reliance Jewels, Indriya, which was launched by Aditya Birla Group, and Carrot Lane, which is again a brand of Titan. Internationally, they have onboarded Damas as a customer. You may not know about Damas, but it operates in Middle East, and Damas is also a subsidiary of Titan. Titan holds, I think, around 67% stake in Damas, which they acquired last year. Sky Gold has grown well over time. Today, its products are sold in more than 2,000 retail stores in India and over 5,000 stores internationally. So as a B2B player, Sky Gold operates at a strong scale. It has been part of my portfolio for the last 2 years and has consistently delivered very good results. Now see, the trigger for a B2B jewelry manufacturer like Sky Gold is that jewelry retailers such as Kalyan, Malabar and Titan are growing very fast. They are taking market share away from small unorganized jewelers. However, the pace at which their retail presence and sales are increasing is much faster than their ability to scale up manufacturing capacity. So if the jewelry sector is growing at say 10 to 15% rate, organized jewelry retailers are growing faster at 20 to 25% rate. That means Sky Gold as their supplier can grow at least 30 to 35% rate easily by adding new customers and also increasing its wallet share with the existing customers. At the same time, smaller unorganized jewelers are also feeling competitive pressure from corporates. So they also are approaching manufacturers like Sky Gold for better designs and trending portfolios. Over the last 1.5 to 2 years, Sky Gold has done 4 acquisitions to expand its product portfolio. Earlier, it used to manufacture only 20 to 25% of the products available in a jewelry store. Today, it offers nearly 80% of the product portfolio of a jewelry store to its clients. Plus, you will see that despite the rally in gold prices, the company has continued to perform well on the business level. If you look at their Q3 results alone, performance was very strong. But let us look at it from a longer term perspective. So, in the first 9 months of FY26, that is from April to December, sales increased 76% year on year to almost 4,400 CR. Profit growth was also very strong. Gross profit grew by 115%, EBITDA grew by 120%, and PAT grew 102%. So, in short, profits have more than doubled across all metrics compared to the last year. And it is not written here, but company has reached 4.5% net profit margin, which is a very good progress. Now, you might say that 4.5% net profit margin is quite low, but see, in the jewelry sector, net profit margins are usually low because see, the base on which margin is calculated is gold, and gold itself is a very expensive product or commodity. That is why it is important to understand the sector dynamics. You cannot simply reject any business by saying it has low margin or whatever. So overall, Sky Gold is performing well on all parameters. They have opened a new office in Dubai to grow their exports. Currently, 10 to 15% of their sales come from outside India, and their medium to long term target is to have 15 to 20% contribution from exports. Here, the Middle East is a very good jewelry market for them. So, exports will always remain a growth option. For now, the management wants to focus on India only, as India itself, as you know, is a very big jewelry market, and they are still relatively small when you compare across whole India or domestically. Once it captures sufficient domestic market share, they will start focusing more aggressively on exports as well. Now, see, the company has grown at a CAGR of around 50 to 60% so far. However, from here on, the management is guiding for 30 to 35% growth going forward. Now, one way to look at it is to say that opportunity is not so good because growth rate has slowed down. But that is not the right approach. Your gains do not come only from earnings growth. PE re-rating also plays an important role. The company will now focus on not only growth but also on strengthening fundamentals. Let us go a bit deeper and understand it this way. For a jewelry company, gold is the raw material. And since gold is a very expensive commodity, a large amount of money gets blocked in working capital. And this is applicable across the entire jewelry value chain, from retailers to manufacturers. Whatever profit you earn, if you want to keep growing fast, you must buy more gold and build more inventory. Otherwise, how will you sell more, right? Now, throughout this period, Sky Gold has continuously expanded manufacturing capacity and even shifted to larger facility which required more funds. Because of this, the company has not generated free cash flow so far and debt has increased. Basically, sales and profits were there, but they got invested back in the business and mostly in inventory or working capital. Now the company aims to generate free cash flow and become net debt free by 2030. That is also a good approach when you are small, because then your goal is to grow. But once you reach a decent scale, you must strengthen your fundamentals, strengthen your business, build reserves, generate cash flow, and reduce debt. Until fundamentals improve, institutional investors will hesitate to invest in that business. And without institutional participation, PE re rating does not happen. We will understand the PE re rating in more detail ahead. Now, in the same direction, the company is focusing on increasing the portion of AGM, that is Advanced Gold Model, and Gold Metal Loans or GML, these two things. Under AGM, the client provides the gold to Sky Gold on a job work basis. For example, client gives say 5 grams of gold and asks Sky Gold to manufacture a gold chain from it. In this case, Sky Gold does not use its own capital to buy gold. And with the introduction of gold metal loans, the interest rate at which they borrow from banks to purchase gold will be reduced by almost half. So this will also help to improve their margins. So overall, better cash flow and advanced gold procurement will reduce pressure on working capital. Net debt status will improve fundamentals, they will get stronger, and gold metal loan part will help to improve margins slightly. Furthermore, Sky Gold has also recently purchased land in Mumbai to set up a new and much larger manufacturing facility of almost 5,40,000 square feet to support its long-term growth. Their target is to increase manufacturing capacity from the current 1.2 tons of jewelry per month to 4.5 tons per month, almost 4 times. This expansion is expected to drive strong sales growth in the long term. This year, the company is expected to do around 6,100 CR in sales. Next year, that is FY27, their target is to do around 8,100 CR in sales, which implies a growth rate of, which implies growth of almost 33 to 35% year on year. Please keep all these numbers in mind because we will use them later to value Sky Gold. And by FY30, management is guiding for almost 18,000 to 19,000 crore in sales. Net profit margin may expand from 4.25% to more than 5.25%. ROCE is expected to be in 27% plus range. CFO to PAT or CFO to EBITDA will be above 20%. and the company will become net debt free, and AGM contribution will increase from 7% right now to 20%. Now, based on all this, let us discuss valuation, scope for PE re-rating, and exit PE concept with Sky Gold as an example. So, first of all, the basic assumption is that jewelry is a structurally very strong sector in India and will continue to grow for years. But also, on the other hand, you will say that due to rally in gold prices, market sentiment around jewelry stocks has been quite negative. But I will say, think about it, just because gold prices have risen sharply, does that mean people will stop buying gold? I will not agree with that view. Yes, maybe some people will delay their gold purchases for some time later, but as Indians, we have a very unique relationship with gold. For thousands of years, we have seen gold both as a status symbol and as an investment tool. Plus, you can also look at it this way, that sharp rally in gold prices has actually reinforced people's belief in gold. It has increased confidence in gold as a strong investment tool. Many people now think that they should have invested in gold earlier. So, yes, a few months or even a couple of quarters might go slow, but overall, in the long term, the industry's outlook and fundamentals remain very strong. People, I believe, will continue buying gold over the next 10, 20, or even 50 years. In fact, this is a time when, due to negative sentiment, most jewelry stocks are trading at relatively lower valuations. And just before we get to the valuation part, let me tell you one more important point here. Due to the rally in gold prices, there has been a shift in the consumption. Earlier, most jewelry sold in India was 22 carat, but now around 20% of sales are coming from jewelry below 22 carat. As prices rise, customers are shifting towards lower caratage jewelry. Secondly, Sky Gold mainly manufactures jewelry priced below 2 lakh rupees. This segment largely includes lightweight and lifestyle jewelry. So, this lower price segment has not been impacted as such by the rally in gold prices. Anyway, let us now go to valuation part. So, as we saw that in FY26, the company's sales can be around 6,100 CR with a net profit of about 260 CR. By FY30, the company is targeting, say, 18,000 CR in sales at a net profit margin of 5.25%. Net profit can be around, say, 950 CR over the next 4 to 5 years. This implies a CAGR of about 30% in sales and nearly 40% CAGR growth in net profit. At the time of recording this video, Sky Gold had a market cap of around 5,200 CR. Based on the estimated FY26 profit, the PE ratio comes out to about 20. We are using the estimated FY26 profit because only one quarter is left for FY26 to end, and all our calculations are also based on FY26 as the base year. Anyways, let us move ahead. Here, you need to understand one very important point also, that today's Sky Gold's PE ratio is only 20 because of multiple factors. First, the company is still relatively small in size and its cash flows are not very strong, or let us say there is no free cash flow. At the same time, there is a lot of negative sentiment in the market towards jewelry companies. Because of all these factors, the market is currently giving it a PE ratio of just 20. But think about it this way, 4 to 5 years from now, when the company is 3 times its current size, generating 18 to 19,000 crore rupees in annual sales with better fundamentals and an improved market environment as well, will it still only get 20 PE ratio? Obviously not, right? So as a business becomes larger in size, becomes stronger, the market usually gives it a premium for size and stability. So Sky Gold can easily receive a higher PE multiple in the future, which we will call the exit PE here. You can take different assumptions for the exit PE. For example, here I am assuming an exit PE of 30 or 35, meaning that 4 to 5 years from now, Sky Gold might trade at a PE of 30 to 35. If you want to be conservative, you can even assume an exit PE of 25. So here you will see, in the bear case, if we assume an exit PE of 30, the company's market cap comes out to be around 28,000 crore. In the bull case, if we take an exit PE of 35, the market cap works out to be about 33,000 crore. So from a market cap point of view, this translates into a CAGR of roughly 50 to 60%. So this is a very simple, very basic analysis, nothing high tech, nothing fancy, just basic common sense. You can apply this to almost any business. At the same time, if you are of the opinion that PEV rating is a weak or unrealistic concept, then just think about it once. As a business becomes larger and more stable, as the promoters build a stronger track record in the market, and as institutional investors start entering mid-cap companies, multiple positive factors come into play. Because of these reasons, any company can receive a premium PE from the market. If I give you another good example of this, you will notice that many recent bets by funds like Parag Parekh or Quant Small Cap have revolved around this idea of PE re-rating only. For instance, Power Grid is a very good example. EID Parry is another example. In such cases, the business may already be moving in the right direction, but over time, what changes is the market's perception of that business. And as perception improves, PE re-rating happens. So overall, I am personally very bullish on Sky Gold. You can also study the company yourself once. Now, in the end, if you found this video informative and useful, please do support us by liking this video, and yes, also subscribe to our channel Simply Stocks. If you support us with your likes and subscribes, we will be able to bring more such videos for you every week. So I will see you in the next video. Happy investing.